Good afternoon, Defions. This is the Defion Productions podcast. I am your host, the hardest working nobody in Bitcoin, Don. This is the Defion Labs Productions weekly live stream, the only Bitcoin crypto live stream in the Western New York area. Let's stop the phone here in real time. We got quite the show today. We got quite a bit of things to go over. We got some news coming out of the Trump administration in regards to housing and Bitcoin digital assets. We have Bitcoin treasuries. We have information on how much are held. We have information in regards to the markets, which we'll start with now. We'll jump on into the charts here. We got Bitcoin sitting at 107,419, market cap of 2.135 trillion. Quite a bit of volatility if you've been paying attention and following along from the weekend when we had the amping up of this conflict where the U.S. got involved and dropped some bombs on Iran. We saw Bitcoin tank. We were sitting in the mid 105s, 106s. I think maybe even we got it up to 107-ish. And then we had a dip all the way down, a wick to like 98.5 is the lowest that I saw the price get to before we eventually recovered back in into the where we're at now at about 107. Ethereum sitting at 2,427, total market cap under the market cap of 300 billion at 293. Fear and Green Index at 50, right in the middle at neutral. Total market cap of crypto 3.27 trillion. Quite a bit of volatility with all the stuff that's going on geopolitically. Saw a lot of longs, saw a lot of shorts getting liquidated with all this trading action, with all this uncertainty. It's been kind of wild, especially with this Trump administration, just never knowing what's going to be said, what's going to be done, and how that's going to affect the markets. Bitcoin has been extremely resilient. We had like 40 something plus days in a row over 100K before we had this little drop wick into the high 90s with the Iran stuff that went on over the weekend, recovered well. And here we are sitting right back close to all-time highs again within striking distance of that 112K. I've been watching a couple of charting channels, even though I'm not a charter. I don't necessarily believe in all that, squiggly line drawing and all that stuff. But even the charters are kind of saying that it looks like Bitcoin's ready for a breakout. It is kind of wild, though, to take a look and see Bitcoin have its little drops and then recovering and getting back to where it was before. The alts taking worse hits than Bitcoin does, but not getting quite back to where they were before Bitcoin took its drop. And the gap between Bitcoin and all these altcoins just continues to go up and up and up. If we could take a look at the dominance too, we can talk about that. The Bitcoin dominance is sitting at 65.1% at the upper end of our range. ETH at 8.9%. So between Bitcoin and ETH, that's about almost 75% of the total market. So the millions of other shitcoins making up the other 25%. Bitcoin just continues to dominate this cycle. Holding anything but Bitcoin this cycle has been just about anything but Bitcoin this cycle has been a losing proposition. Let's jump into the first in our leading story. This dropped yesterday. Bill Pulte, he's a big real estate guy, and he's on Trump's administration as his housing guy. After significant studying and keeping in with President Trump's vision to make the United States the crypto capital of the world, today I ordered the great Fannie Mae and Freddie Mac to prepare their businesses to count cryptocurrency. Cryptocurrency is an asset for a mortgage, so ordered. So I can just read this because it's only one page. Issuing directive to consider cryptocurrency as an asset for single-family loans delivered to Fannie Mae and Freddie Mac. Whereas Fannie Mae and Freddie Mac, the enterprises, maintain a pivotal role in the U.S. housing finance system by providing stability and liquidity to the secondary market for residential mortgages through prudent standards to help ensure sustainable long-term home ownership. Whereas cryptocurrency is an emerging asset class that may offer an opportunity to build wealth outside of the stock and bond markets. Whereas cryptocurrency has not typically been considered in the mortgage risk asset process for mortgage loans delivered to the enterprises without converting the cryptocurrency to U.S. dollars prior to loan closing. Whereas U.S. federal housing FHFA has now determined that the consideration of additional borrower assets in the enterprise's single-family mortgage loan risk assessments may enable the enterprises to assess the full spectrum of asset information available for reserves and to facilitate sustainable home ownership to credit-worthy borrowers. Now, therefore, U.S. Federal Housing, FHFA, as conservator, hereby directs each enterprise to prepare a proposal for consideration of cryptocurrency as an asset for reserves in their respective single-family mortgage loan risk assessments, without conversion of said cryptocurrency to U.S. dollars. Each enterprise is directed to consider only cryptocurrency assets that can be evidenced and stored on a U.S. regulated centralized exchange subject to all applicable laws. Additionally, each enterprise is directed to consider additional risk mitigants per their own assessment, including adjustments for market volatility and ensuring sufficient risk-based adjustments to the share of the reserve comprised of cryptocurrency. Prior to implementing any changes, each enterprise must submit and receive approval from its board of directors prior to submitting to U.S. Federal Housing FHFA for review. This order is effective immediately and should be implemented as soon as reasonably practical. And then William Polte signs it, Director, U.S. Federal Housing, on 6/25/25, which was yesterday. Obviously, this is a big deal for the cryptocurrency industry. However, if you read it out like I just did here and you read through it, it does mention on centralized exchanges. So if I go to this next post here, it looks like Bitcoin held in self-custody will not count as an asset for consideration on home loans. This is a mistake at Pulte. Self-custody is fundamentally aligned with American values. It's trivial to prove ownership of BTC in self-custody. I'm happy to explain how and help. And then it has in red the part of the order that I just read. Cryptocurrency to U.S. dollars. Each enterprise is directed to consider only cryptocurrency assets that can be evidenced and stored on a U.S. regulated centralized exchange, subject to all applicable laws. So, somebody like me that holds 99% of my Bitcoin in self-custody, if I'm going to buy a home, I apparently can't show my self-custody as an asset to buy said home. It would have to be on a centralized exchange like Coinbase or Gemini or one of the other centralized exchanges. It's a step in the right direction that they're recognizing. I guess you could say cryptocurrency, although I think it should just be Bitcoin. But I understand why they're doing what they're doing. But I do agree with Nick Newman that they should be also considering self-custody. And I know, reading into some of the comments and some of the comments just in general about this, you're not posting your Bitcoin as collateral. That's been a misunderstanding for some people. It's not that you're posting your Bitcoin as collateral for the home loan. When you go and get a mortgage, I went through this in 2021. When you go to get a mortgage, you have to show proof of assets. Like they look through all of your financials. I actually bought a home in 2021 and I didn't. Number one, I didn't have to, nor was I, willing to show the Bitcoin that I own for a variety of reasons. But even if I did, it wouldn't have mattered. But even under this ordinance here, if I was able to, they apparently wouldn't look at my self-custodied Bitcoin to use as assets anyways. So I do think that that's got to be looked at. Although this was just signed yesterday, it is a step in the right direction. These types of things have steps that go along the way. This is a good first step. Hopefully it does get amended at some point in time where we can look at, the Bitcoin maxis that have all their, assets in self-custody and also be able to use that as showing proof of assets as well to go along with, getting mortgages. Did you see this, Rich? Any feedback on that or any thoughts?
Admittedly, it's not something I have a lot of expertise in. It's like any of this stuff. It's like I liked what I was wondering. One of the things you answered the question, like if I had a lot of Bitcoin, what I would report it in my, like it's almost like I don't want the government to know officially. I don't want to report it to the government. I just don't. think that's one of the reasons you're doing Bitcoin. So I just didn't get the. I understand why they're doing it, but I just kind of feel like it's a roundabout way of tracking, if that makes sense.
Yeah, yeah, I agree. For me personally, it's not really. I don't really care, I guess. I mean, I do because it's good for the space overall. It's good to see these types of things occur, but in the grand scheme of things, for me personally, it's not a big deal. I mean, I don't.
Well, let me look at it from this standpoint. So, specifically with Fannie Mae and I always forget the name.
Freddie Mac.
Freddie Mac. Like, the average person that's using those, right? They're not billionaires. You know what I mean? Like, they're not using those things. So the amount of Bitcoin in their portfolio is probably not going to be significant.
Yeah, and again, I want to be completely clear and transparent that I think it'll probably evolve. I think this is just like I guess I know it's enacted, so it's weird to say it, but I think it's like the first draft of this, because I think leaving self-custody out was a big mistake. But I've been following William Pulte for a while. He does a lot of philanthropy on X, which is pretty cool. Pulte Homes is like a multi-billion-dollar organization in the housing realm, real estate realm. But I think from what I've gathered, I don't think he really completely has gone down the Bitcoin rabbit hole and understands crypto completely. I think this is just like an acquiesce because Trump's been pro crypto, and that's why cryptocurrency is mentioned so much throughout this. I think it's a good first step, and I think as he maybe learns and does more research, and as this thing kind of evolves, that you'll see a different version of this, and you'll probably eventually see it more Bitcoin focused and more.
So I guess it's a step in the right direction,
and more
but
outside
there's a lot
of
things that have to be.
Yeah, because you'll see because banks are already starting to move into the crypto realm, and even Jerome Powell, who has been speaking the last couple of days in front of Congress, was even asked a question in regards to banks using crypto, and he basically said it's free reign. They can do whatever they feel is necessary for their customers,
Well,
and
that's good to hear.
yeah, and if they feel customers are going to be benefiting from using crypto, that they can start to intertwine those things. So I think eventually you'll see these banks, when people go to get loans, will also because I think you're going to see a day where you're going to have one side of the ledger that's going to be their cash on the balance in their accounts, and you'll have a crypto like you see on Robinhood. Like you'll have that type of when you open your banking app, you'll have that type of availability to have access to your crypto stuff and access to your regular fiat cash stuff. I just think that's the route that we're going.
Interesting.
Yeah. Next article is kind of something we talked about a couple of weeks ago, and I saw this and I wanted to bring it up just to kind of talk about. I know when I brought it up, Rich, you were kind of surprised in regards to the transactions with Visa, MasterCard, and Bitcoin. Justin, MasterCard partners with Chainlink, which enables 3 billion cardholders to purchase Bitcoin directly on chain. So MasterCard and Chainlink are getting together to allow their customers, which 3 billion people in the world are using MasterCard, which is kind of wild. They're almost at 50% of the entire global population. That's just an amazing stat in and of itself. They're allowing access to purchasing Bitcoin on chain. Let's see, down here it says, I know that it's true because I read the article. If you do not provide a link, everybody else should assume that it's fake news unless they verify it for themselves. Please provide a link to the source in the article or you lose credibility. I actually like that comment. I wanted to read that because I think I love X. I love the platform. I love getting information from X, and I get a majority of my information off of X. However, you should always be, like we always say, don't trust, verify. You should always be verifying your information. Just because you see somebody post something doesn't necessarily mean that it's true. You want to do research, as I did when I saw this article. I looked in other spots to make sure that we could verify the credibility of it.
Space, like this type of space, if you're going to be doing something like that, I think you really need to kind of say, hey, did you provide a link, copy and paste or whatever, just somehow so people know where the heck you got this from.
Yeah, it's super important.
I hate when I have to go and somebody posts something and then I got to go try to track down if it's real or not. It's just annoying. So, especially if it's coming from someone that's
Not to get off on a tangent, but the proliferation of fake news is only because our news has gotten so much faster, and we get things at like breakpoint speed that everybody's so fast to be the first one now that everybody isn't doing their due diligence when they're reporting things, and you get a lot of things inaccurately reported, and then the distrust for media is we distrust mainstream media, but I mean, even people that are like individual journalisms or whatever you call freelance journalisms on social media, like they get it wrong too. Everything there isn't. I don't think there's one go-to source that just has the monopoly on truth. I think everybody.
You're only going to one source for anything.
Of course.
I think you're setting yourself up for a problem.
Of course, yeah.
I don't care what it is. I mean, I don't know if anything. I mean, Buffalo Bills. I don't care what it is. Like you should be double checking all your sources.
100%.
Have it, and you need to have like a diverse. You can't find just 5 people to just kind of retweet everything.
A diversified portfolio of news information. That's what I always say. Like with podcasts, like if you watch, but like you're in the crypto realm. Hopefully in the Bitcoin realm, if you're watching this podcast with a Bitcoin Maxi, you should have a portfolio of diversified Bitcoin podcasts that you watch. Like I've talked about some of the ones that I watch and consume consistently. And even of the ones that I watch that I trust the most, they get things wrong sometimes too. It's just the nature of things.
Bitcoiners. There's folks that are in the space and they're trading and they're selling it, and then there's people that are holding on. And
I mean, if you're,
so different content from different Bitcoiners is going to have different opinions and recommendations, so to speak.
Good morning, Frank. Yeah, we talk a lot.
Yep. Sorry, I started a video before I wanted to start it.
Okay.
But just on that last point that you made, yes, I agree with you. There are many different types of the Bitcoin appetite for Bitcoin, I should say, from your hardcore Bitcoin maxi cypherpunks from my era of the early days to your newer aged Bitcoin maxis that are number go up and excited when they see all the ETF news or excited when they see the Bitcoin Treasury stuff and are just like different aspects, different theories. And there are podcasts specifically for each segment, and there's podcasts that kind of give you everything. And I think it's important that you gather your information from all kinds of different sources and use that to continue to support and evolve the thesis that you have. All right, this next article, which is a quick clip that I'm going to show, kind of goes into a little bit of detail about, because there's been a lot of talk in regards to some of the stuff we're going to talk a little bit later on in this podcast in regards to the a lot of the companies that are putting Bitcoin on their balance sheet, these brand new, like Anthony Pompliano has just announced that he's got a company and they just bought thousands of Bitcoin, and there's just all these new companies putting Bitcoin on their treasuries. The ETFs continue to buy them, sovereign wealth funds continue to buy them, but like, why aren't we getting past that 112,000, and why aren't we in the 120s, 130s, 140s and getting into price discovery? And here's a clip of a CNBC interview that kind of talks about one theory on why we're not necessarily like blowing past the parabolic stages of a Bitcoin bull run right now. Let's take a look at this real quick. It's only a minute 27.
Morning, Frank. Yeah, we talk a lot about who's buying Bitcoin. We do not talk as much about the sellers. So yesterday, to your point about the flows, Frank, was the 12th session in a row of positive inflows for Bitcoin ETFs. Flows are on pace for their 9th positive week in the last 11. It's almost $4 billion for the month of June. And all of that underscores the strength of institutional demand that we've been talking about all year, even amid market uncertainty. And yet, Bitcoin is only up about 3% this month. We know who's buying Bitcoin ETFs and corporate treasuries, but there's a fair amount of selling taking place as well that's almost perfectly offsetting the buying and keeping the Bitcoin price stuck, and it shows a real change in ownership in the Bitcoin market. Now, looking at data from CryptoQuant, we can see that early mega whales, think Chinese miners around 2013, 2014, they've been holding on to their coins for longer and waiting to offload them in greater amounts to today's biggest Bitcoin buyers. We're talking about 3 different cohorts of Bitcoin whales. The smallest wallets hold 1 to 1,000 coins. That's institutions via Bitcoin ETFs, they tend to fall into this category, and they've been the biggest buyers this year. But if you look at wallets holding 1,000 to 10,000 coins, and then wallets holding more than 10,000 coins, they've been selling this year. And I'll also note that retail investors, Frank, have been sellers, but that cohort is a little bit too small at this point to be moving the needle on price.
You know, really interesting stuff. And I know you write about this quite a bit, so we'll have to continue to track this one. Tanea, really great to see you. Thank you for coming in.
Thank you.
So that's very interesting, and I think that, you know, at first glance you're just like, oh my god, like a lot of the OG holders are selling their Bitcoin, profit taking in the plus 100,000. You know, that's not a good thing. Oh my god, like that would be the initial potential reaction. But I think this just shows the strength of the protocol, because you have coins that are being moved from older holders into new holders, and you're allowing these coins to be circulated, and eventually it'll get to people that are never going to sell, and it's just doing its thing as a protocol. And I think this is a good thing that you're getting some of these older coins to be sold and to move. And while this is happening, while we're not seeing the explosion in the price that everybody wants, like I led this off with, but you're still seeing the price hold over 100K for extended period of time. So I think that this is all good. And as we take what I believe to be, as I was talking to Troy earlier this week about like my thesis and how it's evolving in this cycle from what I thought was going to happen before the cycle started in the beginning parts of the cycle to where we are now. Like, I just think we continue to take the stairs up. I think everybody looking for that elevator ride up is going to be disappointed. And I think it's fine if we keep taking this stair stepping movement up towards, you know, getting finally past 112 and then eventually getting to 120 and then 130 and so on and so forth. I think it's fine as this class has matured, as this asset has matured, that we see more of a stair step move up than these, you know, parabolic moves up and then these violent crashes down. I just think that we're probably, and I said this to Troy, I think we're getting close to potentially not seeing an altcoin season. And I know the crypto people that may be watching this, and I don't know why you would be now that, you know, Bitcoin Maxi's doing this podcast mostly himself all the time, because I'm going to shit on the shit coins. But I think that the people that do their crypto shit coining are going to be disappointed, you know, waiting for ETH to make its move or waiting for Solana to do whatever it does. And, you know, the meme coin X and fart coin and all this nonsense to have these big, huge moves. I just don't think, I honestly, personally, just don't think it's going to happen. I just think Bitcoin is going to continue to have an overwhelming dominance. And, you know, the longer that people stay in this space, the smarter that they get. And the smarter that they get, they realize that Bitcoin is the only asset that they should be holding. That's just how it goes. You'll still have people, but like the shitcoins aren't going anywhere. ETH isn't going to die. Solana isn't going to die. There's going to continue to be a new meme coin because people will continue to want to gamble, and people will continue to come into the space new, and they'll want to do their degenning and gambling with those coins. But I think the longer that people are in here, because all of us, myself included, you start out, even though like when I came in, it was Bitcoin and like 3 or 4 or 5 other coins, like you still do your shit coining. I owned Ethereum and Litecoin and Potcoin and XRP. No, I did own XRP back in 2016. And Monero and all those other coins. Like, you eventually do your shit coining and you learn. And as you learn and study Bitcoin more and become more and more of a fundamental, deep understander of Bitcoin and its protocol, what it does, why it exists, what it's here to do, that eventually you just let go of the shit coining and you just focus on the most pristine asset, which is Bitcoin. And you stop doing the shit coining. And you know, this Bitcoin thing has been going on for, 16 plus years now. And there's a lot of people that have come in, and there's, the early first cycle people, the second cycle people, and, that saw that first or that second, parabolic top in 17. Then you had the people that were stuck around, and the people that were in the 2021 one, and now the people in this cycle, and more epochs pass, and you have more people that are doing the work and studying and understanding and just holding Bitcoin and less people that are there in the shit coins. And there's just not enough liquidity and not enough money to get those ridiculous pumps that you got in the 2017 top or the 2021 top. And I just don't think you're going to see that. And the people that are expecting that kind of quote unquote parabolic alt season are going to be disappointing. I'm not saying that you're still not going to have a run with the altcoins when Bitcoin does its thing, because it typically happens. People still are going to take profits and move them into those coins and gamble, and those coins will have their movements. But I think the days of the altcoin season or those parabolic tops in the crypto coins are dead. I don't think we're going to see that. I just don't think that's where we're at. And I know that was a long rant starting with that video and going into that, but that's just it's kind of my belief. It's kind of where I'm standing, sitting here today on, June 26th, 2025. All right. Our next video we got here is a Jack Mallers clip. Jack Mallers is one of the guys that's accumulating in his own treasury fund. Here's a 2-minute and 34-second clip. This is from Bitcoin News. Jack Mallers, we're in another Great Depression. Most people just can't see it because we're using the wrong measuring stick. Let's listen to Jack lay out that thesis.
Everyone's always asking me, hey Jack, if Trump's official policy is America first and telling China get their money out of the country, and everyone goes, well, isn't the stock market then going to have to go down? And I say, yes, absolutely. They say, but Jack, it keeps going up. Aha. Going up in what? Brooklyn Daily Eagle, October 24th, 1929. The Great Depression. The DGIA hits its lowest point on July 8th, 1932, 89% below its September 29th peak, defining the most significant bear market in Wall Street's history. The market would not return to its 1929 high until 1954. The Great Depression. So the stock market down 89%. And people say, but Jack, the stock market has not been down that much in recent memory. In 1929, the dollar was backed by gold. So the stock market was down 89% in gold terms. That's why it was a real depression. You see? Let me show you. From 2000 to 2011, the stock market was down 89% in gold terms. So if you measured the stock market in gold, you already lived through a Great Depression, hotshot. You just didn't see it. We had a Great Depression in plain sight. How? Manipulation of the money. What I'm saying is, yes, the stock market is going to get obliterated. Obliterated. In what? Not in dollars. Stop looking at things in dollars. You're going to miss these things in broad daylight. The whole world has already lived through stock market crashes, just not in dollar terms. People say, oh man, my stock portfolio's up again this year. Weird. Why can't I afford rent? That's weird. Why am I getting less groceries? That's weird. Filling up my tank is really expensive, but my stock market went up. Depends what you're measuring in. You understand? The S&P 500 against Bitcoin over the last 5 years, down 81%. What about food? Food's down 85% against Bitcoin in the last 5 years. We lived through a depression and a performance that was greater than the Great Depression, but no one batted an eye because they used the wrong measuring stick.
Now, that was a great clip. That basically encompasses everything us hardcore Bitcoin maxis believe in and see. And that's why we save in Bitcoin. That's why we don't sell our Bitcoin. That's why we just hold Bitcoin and we don't trade it. We don't leverage it. We don't do all that ridiculous, stupid nonsense because we don't value fiat. We just showed you, I say we like it's me and Jack. Jack Mallers just showed you, and I thought it was wild. Like when I first saw the clip before playing it today and I saw 89% drop, and then from 1929 until 1954 it took before we got back to where we were in that 1929 high in September, I was like, holy cow, that's wild, right? And then when you realize that back then in 1929 to 1954, we were on a gold standard. So the gold was backing the money. So you could see and you could feel at the same time. You saw and felt a depression because you were measuring it in the fiat, but the fiat was backed by the dollar. I'm sorry. The fiat was backed by the gold. So you were feeling and seeing everything at the same time. 1971, we come off of gold. Now you have just fiat. There is no gold backing it. So now when that happens, you go through a 2000 to 2011. Now what happened in that time frame? Let's take a look really quick to realize what we went through. September 11th happens in 2001. The stock market in a 2.5 to 3 year period drops about 41%. From 2001 to about 2003 when we come back, it's about a 41% decline in real terms, nominal terms. Then what else happens? 2008 happens, right? 2008, you have 1 year of like a 37% drop in 2008 alone, bottoming in 2009 and not coming back again until 2010 and going on this ridiculously high, never seen before bull run, right? Here's the problem. When you measure things in gold from 2000 to 2011, you have the exact same 89% in gold terms drop that you had in 1929, but you don't see it because they're printing dollars. So when everybody looks at the market and they look at their stock portfolio and they look at everything in terms of nominal fiat, they think they're doing great. They're like, well, things cost a little bit more, but look at my account. I have hundreds of thousands of dollars in my 401k. Things are going great. Yeah, I'm struggling a little bit now, but when I retire, I'm going to be doing so good because look at this number, right? That's from 2000 to 2011. Now look at 2020 to 2025 and take a look at what happened, right? You're looking at the stock market. And again, this is just, it's mind blowing. And I really want people that are watching this either now in live real time or on playback or sometime in the future, if you're getting this in the future, to just think about like all the craziness that's happened in our markets. You had just in the last 60 days with Liberation Day in April and the tariffs and the stock market going down that huge percentage point, dropping almost 20%. And here we are sitting today, and I'm not going to look in real time, but we're somewhere close to, if not at, all-time highs again in the NASDAQ, in the S&P, in the Dow. Like we're all flirting with all-time highs again in the markets. Yet, when you go to this grocery store and you look at the price you're paying for groceries today compared to 2019, it's significantly higher. Right? If you go to market to buy a house and you take a look at what a house costs today compared to 2019, it's significantly higher, right? Any good or service that you're going to market to purchase, if you look at the price today compared to 2019, it's significantly higher. But all you hear and see is, oh, look at my 401k portfolio. Oh, look at how my stocks are performing. Oh, look at all these things are performing. And you're like, oh, things are going well. Even when you look at Bitcoin, if you're not a true Bitcoiner, if you're an outsider looking at Bitcoin, and believe me, I get this all the time. They're like, oh my God, Bitcoin's 107,000. It was 16,000 3 years ago. How much did you sell? Have you taken your profits? It's like, oh, profit taking. And when I hear that, I literally throw up inside and I die inside a little bit. Every time I hear someone refer to the term profit taking, when they're like, oh, profit taking with Bitcoin, what are you taking profits in? You're taking profits from the most pristine asset into the asset that is completely getting debased right in front of our eyes. Like we're seeing it happen every single day. But the problem is each and every person out there that's not a Bitcoin maxi is measuring it with the wrong measuring stick. You're looking at things in dollar terms. And again, I understand why. And everything in the system is designed to get you to do this. So it's very hard to break free from it. And it's that matrix, red pill, blue pill moment. Like it's the orange pill. Like until you actually get orange pilled, it's hard to understand this. And it's hard to see it through the eyes of a Bitcoin maxi because your whole life is denominated in dollars. Everything that you go and do in your life is based on, I'm going to spend $1 to try to make $2. Not realizing that it's the buying power that you really want to get, and that completely gets eroded. Because if you put $1 into something in 2019 and it made you $2, and you made 100% gain in 5 years, and you got a 20% return when you divide that by, your CAGR, and you're like, wow, I did really good. I made 100% in the last 5 years. And it's like, well, your buying power has been completely eroded, that you really didn't make 100% when you take a look at really where you're at. And we've used this figure with the housing. We've talked about it before, where it's like, oh, if I bought my house in 2019 for 200,000 and I sell it today for 400,000, it's like, oh, I made 200,000 on my home. But when you take a look at how much Bitcoin you could have had in 2019, you take a look at how much Bitcoin that would be worth today, like you lost. If you put it in that home at 200,000, you're actually behind, not ahead, even though you're looking at the value in the fiat dollars. And it's such a hard thing, and I get it. It takes a lot of time to really study, and it's why we say, like, and people get upset when you give them this feedback on, social media. It's like, study Bitcoin. It's like, oh yeah, you're such an asshole for saying study Bitcoin. It's such a pompous thing to say. It's like, if you don't take the time to study and understand why Bitcoin was created, if you don't take time to understand what Jack Mallers just showed you in 2.5 minutes, when you're showing things, and that's in gold terms, not in Bitcoin terms. Like, if we take 2011, when Bitcoin started to exist, and you take 2011 stock market to 2025 in Bitcoin terms, it's like 99.99% you're down. You're getting absolutely obliterated. And you're talking about 2011, the Dow Jones was probably at, I'm just going to throw numbers out there, you're maybe at 9,000, and the Dow's at, 40,000 now? So that's like a 4X. So you're up 400 and something percent. And Bitcoin in 2011 was maybe $3. So $3 to 107,000. It's not even close. You're down 99.9% from that point until now. And you don't have to use Bitcoin. You can use gold, right? People don't want to use Bitcoin. Okay, cool. Let's use gold. Use gold. Gold was sitting at, in 2011, I don't know, 1,500, right? And gold's sitting at what now? We're at all-time highs, 3,500. Like, it's just the comparisons are just ridiculous. It's you're viewing things in fiat terms, and I understand why the system teaches you to do that.
I have an interesting analogy.
Yeah,
for
please
this.
chime in.
I was a math teacher, and one of the things that we talked about when I was going to become a teacher was the metric system. So the funny thing about it is, why did the metric system fail when it was introduced in the United States? And the research all shows, not because we didn't like it or because it's a stupid system or the rest of the world and we're not doing it because we're Americans. It failed because the way we taught it. We made it stupid. Instead of teaching the kids what a kilometer was or a gram was, we said a gram is like a pound and you have to convert it by 3.7. So you have to do all this math. And they did everything they did instead of just trying to get people to understand what the metric system was and how to measure using it, getting people to understand what it was. And we use it for a lot of things, but we did it wrong. And people never accepted it because it turned into like homework, that you had to like get a calculator and you had to do math. And it's this, in a weird way, it's the same thing. If I'm trying to understand the value of Bitcoin based on what it looks like compared to $1, I totally get that guy's point. And that was immediately what kicked into my head, is we're trying to understand it, comparing it to these other things that you almost have to put those other things aside, which is why it was invented in the first place. So it's like, well, how many dollars is that? And it's like, I had this conversation with a friend of mine over the weekend. He was talking about the value of his house. And I said to him, you're looking at the Zillow value of your house and you're all impressed with yourself and you think that you've done all this stuff. I go, but when you bought that house in 2004, I think he said he bought his house. I asked him what he spent on it. I said, okay. I go, how much were your groceries back then? A month or a week? And he's like, I don't know. I said, I guarantee you, if your buying power's not there. So like, you can't turn around. Your house didn't go up in value by that much. It went up in value, sure, but not in the way you think it did. It's not triple what it was or 2.5 times what it was. It's not, because the buying power of that is not 2.5 times what it once was, right?
Mm-hmm.
Like just gas. What was gas in 2004? And I know gas goes up and down, but like anything you want to compare it to, there's nothing that's come down.
It goes back to the thing that I always say is like you have to understand the system that you're engaged in to understand Bitcoin. And the problem is people don't understand how to value dollars. So getting them to understand how to value Bitcoin becomes next to impossible because they don't even know how to properly value the dollars that they have. So what sticks in my mind is I remember working in the 90s and making, but the first job I ever worked, I made $4.25 an hour. And I remember back then, if you made $10 an hour in the 90s, it was like, man, you're making some money.
Yeah.
$10 an hour was like, for my generation, there was a point in time where if you made $10 an hour, you were doing something, right? And then I remember like the mid 2000s where $10 an hour was no longer a big deal. And it was just like nothing. And having conversations with certain people where they were talking about $10 an hour the same way 10 and 15 years later that they talked about it 10 or 15 years prior. Right. And I'm thinking to myself, like, you never evolved to recognize that that number has completely changed. Not because the number's different. 10 is still 10. It's still 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. There's nothing different there. The only thing that's changed is what you can get from that 10.
Right.
And people don't understand
1987,
and evolve.
1987, I got a job. I got a promotion in my job, and I was making $8 an hour. And with that $8 an hour,
oh, you were crushing it back then.
I was crushing. I was
oh
like,
my God.
And I was 19 or 20. Okay,
you were smoking it.
I was grinding.
Yeah,
I had another job too, so I was also doing other stuff on the side. So all that money, I paid for my college, which college wasn't as expensive back then. My dad had helped me with my car, so I didn't have a car payment. But then I saved all that money, and when I started teaching, I had enough money to buy a house. My second year of teaching, I had enough money to put down a down payment to buy a house in 1990, fall of 91 or 92 or whatever it was. I mean, and I wasn't making, I mean, my first teaching position was so I mean, again, that I've done this with teachers, with new teachers, compared their salary, their starting salary, which is 40s, versus mine in the 30s, versus the property values, car values, cell phone costs, all that shit. It's not, the money's not the same. And I had this Greek conversation with my son, who's not a Bitcoiner, but totally understood. Again, I know one of your topics was the World War III thing and why we buy bombs and why we drop bombs and all that stuff. And he understands there's an economy based around it. It doesn't cost us, we spent all this money to drop a bomb. It's not real money. Like, people are thinking in terms of, I think, what they thought like minimum wage was when they were 20 or 15 or whenever they got that first job. And that's why, like, that's a really good video. Like, I got to make a joke about that guy though. Like, where the hell is that guy recording from? It's like an empty storefront.
That's his thing. That's what he does. It's his empty closet. He does it from his empty closet.
Is that what it was called? Oh,
it's his empty closet.
I didn't catch the name of the thing.
No, that's where he does it from.
That was distracting to me.
No, that's what he does. That's where he podcasts from his empty closet.
So it's literally an empty closet. Yep. It's just like a really nice.
And he's worth a ton of money. Yeah.
That's very interesting.
Yeah.
Cool.
So yeah, it just goes back to, you gotta, if you understand nothing except for this one thing, it'll get you so much farther than if you didn't. And it's just try to wrap your head around buying power. Stop focusing on how much you make. Stop trying to focus on how much you have in your 401k. Start focusing on buying power in real time today. Like, what do I make and what does it buy and how do I get in a better position than I'm in right now? Not I make $100,000 today and I want to be making in 20, or let's say in 5 years, I want to make 120. It's like, no, today I have this much buying power. In 5 years, I want to have this much buying power, because the dollar value might change. It's going to shift and vacillate and fluctuate. You need to figure out how to understand buying power, because if you don't understand buying power, you're done. There's so many people walking around. listen, I do traditional finance stuff as a day job, and I have conversations financially with people every single day. You know, and they know I'm a Bitcoiner, so they ask about that stuff as well. But the one thing I try to drill into people, whether I do business with them or not, is wrap your head around buying power. Stop focusing on, I want to save this much amount of dollars, or I want to have this much amount of dollars when I retire. You need to get in an intense, deep relationship with buying power and understanding what that is and what that looks like for you. Because if you don't, and you're just worried about nominal numbers, it's going to be real bad for you real quick. And you're never going to understand something like Bitcoin or any asset that's outpacing inflation, that's giving you a chance of buying power. Super important. All right, let's jump into this this next video that I'll show. You know, we're showing a couple different videos today. This is Senator Lummis talking about the U.S. Buying Bitcoin for its strategic reserve. It's only 43 seconds. Let's take a real quick look at this clip.
I think the fact that a tool's been identified that if you buy 200,000 Bitcoin a year for 5 years for a total of 1 million Bitcoin, which is 5% of the world supply, hold on to it for 20 years. And with some of the best modeling available, it shows that it would cut our national debt in half. That's a game changer. So if you were to couple that with a Congress that's more committed to getting to the point where we match our revenues and our expenditures, we can retire this debt. It's the only vehicle I have ever found that will achieve that. I think the fact that a tool...
Yeah, more strategic Bitcoin reserve talk from Senator Lummis. Personal feelings, it's never going to happen. I don't see him buying 200,000 Bitcoin a year to get to 1 million Bitcoin. I certainly don't see them ever retiring the national debt using Bitcoin. It's just, it's exciting, I guess, for Bitcoiners or speculators to get excited about the United States putting Bitcoin on its balance sheet. But as long as Bitcoin is the world reserve currency and they're operating a debt-based model, they're going to continue to just print money, and they're just going to continue to create more debt. They're not in the business of solving the debt. Senator Lummis, you know, says the right things. It feels like she understands somewhat Bitcoin, but she's a politician. She's doing political things. I just don't believe that Bitcoin's going officially to be a reserve asset in the same way that gold was back in the day. It's just my opinion. Bitcoin was created to solve this problem. Bitcoin was created to solve this problem for individuals. It was not created to solve this problem for governments that are going to continue to operate in one fashion, a debt-based model, and then also use Bitcoin to solve the debt-based model. It's like oil and water. It doesn't mix. It's not going to. Justin Beckler on Twitter has outlined this in multiple threads, better than more eloquent than I ever could. If you don't follow him, I would. He's a great follow on X. It gets us excited. It gets the price moving sometimes, but I think it's just it's a lot of talk, and it is what it is. But I thought I would show the video to kind of share it. Next article here. Let me expand this so we could get a better look. Let me see. Can I expand this? There we go. So these are the top public Bitcoin treasury companies. You got Microsoft leading the way. There's 60 of them. And then you have LM Funding America on the bottom end of the spectrum with 155 Bitcoin on their balance sheet. MicroStrategy leading the way with 592,345, with an enormous lead over the second one, which is Mara at 49,678. XXI, Rich, is Jack Mahler's company, the guy that we showed, at 37,230. A couple of these here, Mara, Riot, CleanSpark, they're all in Hut are all mining companies. Then you got Coinbase, an exchange, all in the top 10 there.
On that list, just so you know.
No, I'm not nope. GameStop at number 14.
GameStop is hilarious. That's the.
They're number 14 at 4710. looking through here, Nexon, company that I recognize. Let's see what else. Anything else? Like not a real lot of like traditional companies that you would be recognizing and be like, oh, like what? Like these are more like under the radar companies that are trying to revive, or they're Bitcoin focused oriented companies. But I think we're seeing a increase in obviously an increase in the Bitcoin Treasury thing. People jumping on the bandwagon, trying to revive companies to follow the model of Michael Saylor and do what Michael Saylor did and try to replicate some of that magic. Next one, you are part of a special moment in history. Do not let this chance go by. Get to point one, then one, stay humble, stack sats, and then I'll show this chat GPT side-by-side comparison. People who can realistically own 0.1 Bitcoin, FOMO scenario, estimated count 20 to 60 million, which is 0.25 to 0.75% of the population. Millionaires worldwide, 56 millionaires, which is 0.7% of the global population. Next chart. Final takeaway. Even during mass adoption and global FOMO, likely less than 1% of people on Earth will ever own 0.1 Bitcoin. If you already hold that amount, you're ahead of 99% plus of the population, and scarcity will only make that more significant over time. So obviously, 0.1 BTC in a future scenario is going to be a large number. I still think that's somewhat far out in the future, but people have their different thoughts and opinions. So imagine how much having one whole BTC will be in the future. Just with the math of there only being 21 million ever, and right now we have in the neighborhood of 60 million millionaires, only a third of the current class of millionaires in the world could ever hold one, and you have an organization like MicroStrategy with 592,000 of them just themselves. So as Bitcoin gets more and more mass adoption, as Bitcoin becomes more and more accepted as something that people of elite status want to have and hold, and the value continues to rise, supply and demand kicks in. And as more pristine of an asset it's viewed, the fact that only 21 million will ever exist, and like I said, 500,000 plus are already owned by one entity. And then we go back to that list of all the publicly held companies that are holding millions of them already, plus the millions that have been lost, plus Satoshi's million that is never going to. It's just the math just starts to show you how the price accelerates, and it's like it goes up forever. And there's so many factors that make it such.
MicroStrategy is obviously a huge percentage of it. And will they, at some point, he
says he's never selling.
He'll never sell.
He's leveraging it.
Okay.
That's
I was just wondering, what point would he? I mean, obviously he's saying never. So nobody should ever say never, but
never say never. Yeah.
But what point would it be ridiculous for him not to? Would it? And I don't even mean like a dollar amount, because again, I don't want to think about it in terms of dollar amounts. Would there be a point where it would make so much sense for that organization, for that company, to be like a brokerage house in the sense that they have so much?
I think that's what he's trying to do.
Right.
I think he's trying to shift from a tech
where people
company
will be begging.
I think Michael Saylor's.
We will give you land. We will give
Michael
you
Saylor's ultimate goal, I think, and I think he said as much in some respect, is to turn MicroStrategy from a tech, because they're no longer. I mean, they're a Bitcoin proxy now.
Right.
They're more a Bitcoin proxy than they are a tech company.
Yeah,
I think his
Tesla
ultimate
and
goal.
GameStop are not.
His
I'll
ultimate
pick two
goal.
that I know, Tesla and GameStop. GameStop's not a video game store anymore. They're like they are, but the reason they exist is because of the amount of Bitcoin they own, like what they own. Like
Outside of Satoshi's wallet, MicroStrategy is the largest holder.
Right.
I think the goal is to pass Satoshi's wallet eventually, and then just become basically the Bitcoin bank.
Right.
and just do all financial services, Bitcoin loans, all the stuff that eventually this market will have mature products of. MicroStrategy is going to be the go-to, and Michael Saylor will be the richest man in the world, and he will have all those products there. I think that's his goal. That's what he's
Till Satoshi
trying to do.
comes rocking up.
He would have came by now.
Like WWE.
Yeah.
Like he's going to come crashing in someday.
Yeah. I found this funny because you mentioned it. You mentioned it earlier, so I found it kind of funny. Here on Capitol Hill to see how my tax dollars are being spent. Hint, it's on bombs. You know, that's
I love that.
it's basically what's happening. And then ironically so, to end kind of the podcast, if it what happened to this tweet? Let's get this back up so we can play it. Oh, is it not going to play now? That would be tragic because this is basically Saylor. Why is it not? I wonder what happened to this tweet. It's a good clip. It's like a 25-second clip. It was a really good clip to end the podcast on.
Yeah, we're still our internet's fine.
Something wrong with the tweet, I think. Well, that's a buzzkill. He's basically answering a question from Jordan Peterson. I think that maybe the tweet is. No, it should tell me that the tweet no longer exists.
That's weird.
And it's not doing that. Let me click on his profile and see if I can get it through that. Maybe the tweet's gone. Yeah, because I pre-populated it. I pre-populated it. Oh, there it is. But it's doing the same thing. So basically, Jordan Peterson asks, if Bitcoin is what you say it is, then it should end up sucking up all 900 trillion of global assets. And then Saylor kind of cuts him off and says, it is, it will, and that's why I'm here. You know what I mean? Like,
that's a great
it is, it will.
That's a great response.
Yeah, it is, it will,
awesome.
and that's why I'm here doing what I'm doing. Basically giving up my role as a CEO of a tech company to be basically the CEO of a Bitcoin bank. So we end the podcast with Bitcoin up a little bit, 107,589. And you know, another week, another live stream. We'll keep doing this thing. As always, please, at the bottom of the screen, if you're not following the YouTube, Defion Productions, on X, at Rinaldi_Don. Obviously, if you're watching this on Facebook, like the video, share the video. Please share this stuff out. We're a very small operation. We're just doing this for the love of Bitcoin, for the love of the ecosystem, for the love of education. Again, diversify your podcasts that you watch. Hopefully we're in a rotation of some of the bigger ones that you watch. As always, as we end every single podcast, don't trust, verify. Thanks to all who tuned in this week and watched, and anybody that liked, subscribed, or shared and helped out giving the message of Bitcoin. See you next week, guys. Peace.